And we're live. Assalamu alaikum wa rahmatullahi wa barakatuhu. Good evening to everyone, and welcome to April 2nd and the I Left My Heart at the Masjid daily broadcast. Inshallah, everyone's doing well today and enjoying this shelter at home, staying at home, bonding with your families, getting a little closer, reciting some beautiful Quran, inshallah. Tonight, inshallah, we'll be discussing the financial aspects of coronavirus pandemic. As a reminder, on Tuesday, we had Imam Omar on the show, and he explained some of the fiqh opinions to whether or not we can take out a mortgage during this crisis or receive some mortgage assistance, whether or not small businesses could take out a loan during this tough time, and various other fiqh questions related to the CARES Act signed by President Trump recently, alhamdulillah. There's a lot of nuances there relating to the Islamic perspective on this financial crisis. And today we'll be discussing the other aspect of that, the implementation and how exactly some of this free money from the government will come into our hands, as well as how this will look for a lot of us. Some of us might have money invested in the stock markets or might be curious as to whether our jobs and our companies would be largely affected by this. So inshallah, we'll have Brother Ahmed Kukwa will be joining us to discuss from a financial perspective, what does the coronavirus stimulus package look like, the CARES Act, as well as some of the other nuances of finance during this time. Finally, as a reminder, yesterday we had the school principals on. We had the An-Nur and Al-Iman school principals, as well as the school chairs. And they both discussed what their schools are doing right now during this coronavirus pandemic, as far as online teaching, what fundraising might look like down the road, if there'd be a virtual graduation. I was denied keynote speaker, unfortunately. But inshallah, we will be tuning into them later down the road, and we'll have some of the students from Al-Nur and Al-Iman will be reciting for us or going through skits. But right now, I'm going to pass it over to our wonderful Imam AbuTaleb to discuss and begin us with a nice dua in the name of Allah, inshallah. Imam AbuTaleb.
Jazakallah khairan, Brother Kashif. Assalamu alaikum, everyone. Bismillah, alhamdulillah, wa salatu wa salamu ala rasulillah. Great to be with all of you this evening. We'll begin with the dua. Allahumma inni a'udhu bika min al-kufri wal-faqr wa a'udhu bika min adhab al-qabr la ilaha illa ant. This dua was one of many where the Prophet ﷺ turned to Allah Azza wa Jal in his supplication. The Prophet ﷺ used to ask and prioritize the needs of al-akhirah, but he was not unmindful of the needs of dunya, for dunya is the capital that the believer invests, inshaAllah, to reach and meet Allah subhanahu wa ta'ala in al-akhirah. And in this dua, the Prophet ﷺ sought refuge from Allah subhanahu wa ta'ala in many things. He asked for Allah subhanahu wa ta'ala's protection from rejection of what he recognized was true and disbelief. He asked for Allah's protection from poverty and being in the need of others. And he asked Allah subhanahu wa ta'ala's protection from the torment of the grave, for there is none worthy of worship except Allah Azza wa Jal. This actually, in this dua and others, our notion about the Prophet ﷺ and the prophetic attitude towards finances and the Islamic importance around financial health and wellness is challenged. A lot of us wrongfully think that the companions were poor or were uninterested or unfocused on financial affairs, or that the Prophet ﷺ himself was always of limited financial means. This is actually not true. The Prophet, peace and blessings be upon him, from the greatness of his prophethood was that he went through very diverse experiences. So he is incredibly relatable to all of humanity because he had so many diverse tests and difficulties in his life. The Prophet ﷺ went through periods of very limited financial means. Late in his life, he is sharing with the companions in a hadith, younger companions that weren't alive when he was a young man, that there is not a prophet that was sent by Allah except that he tended to the sheep. Every prophet of Allah had a period of life where they tended sheep. But the young companions never knew that the Prophet ﷺ had that responsibility. So some of them asked them, even you, O Messenger of Allah, He said, Sallallahu Alaihi Wasallam, even me, I used to tend them for the people of Mecca ala qararit, for the equivalent of pennies or very meager wages. Prophet ﷺ was from a very noble family, but he was an orphan, and Banu Hashim, his clan, were not thieves. So he was very poor, of limited financial means for a good portion of his life, and that's why he's very relatable to the poor. At the same time, the Prophet ﷺ held great wealth in his hands. Alhamdulillah, he worked for and then married the noble Sayyidah Khadija, may Allah subhanahu wa ta'ala be pleased with her, and started to gain more, alhamdulillah, finances. And then towards the end of his life, for example, in one situation, he actually acquires animals that are between two mountains. This is like someone acquiring a fleet of cars in our time. It's a lot of money, a very significant amount of money. And he, sallallahu alaihi wasallam, saw a man who was wide-eyed looking at it. And the Prophet ﷺ looked to this man and he said, do you like it? He said, yes. He said, it is yours. So Prophet ﷺ, like that, gave 5 and 6 figures equivalent and more in our terms. So that's why the Prophet ﷺ, he left inheritance as knowledge. He didn't leave a lot of material wealth. Even his homes were all assigned to his wives. He had very little that he held in this dunya when he died. That's not because he didn't acquire, it's because he never held on to it very long. He was so incredibly generous, the most generous of humanity. I say this recognizing that this particular tragedy touches us all, and we acknowledge the suffering of every person. And yet also, the aspects of this tragedy that touch us financially, though it touches us all, it touches us differently as well. And we should acknowledge this. Some people are struggling with basic financial and food security now. And it is our responsibility, as the Prophet ﷺ says, he's not truly amongst us the one who goes to sleep and his neighbor is hungry. Others, alhamdulillah, your profession, although you may have, alhamdulillah, generally healthy cash flow and so on, the present circumstances has devastated your profession. Therefore, for a period of time, a person is burdened with that or is overcome with these circumstances. Other people may, alhamdulillah, certainly be affected, but less affected than others. They may have, alhamdulillah, professions that are telework friendly or have their needs met. And still others, alhamdulillah, may have more of a safety cushion and may have more, ability to weather this than others. At this type of time, while we all plan for our individual wellness, it's important that we think of each other as well. And opportunities like tonight, alhamdulillah, give us that opportunity, as the Prophet ﷺ himself sought to have his needs met and not be in need of others to the extent he was able, but also, inshallah, to think of others while we build our own financial wellness, to think, inshallah, of helping everyone have their basic needs met that are in our midst and our circle of influence. To help us tonight, we're very, very blessed, alhamdulillah, to have Brother Ahmed Kulqa. MashaAllah, introducing him would take time, but in addition to an esteemed community member, alhamdulillah, him and his family, we are incredibly grateful, alhamdulillah, for a number of his services and his broad volunteer spirit. Alhamdulillah, Ahmed does serve on our current Shura. Alhamdulillah, in addition to serving as the current fundraising chair for the IR committee, and alhamdulillah, a lot of hard work alongside Brother Ahmed Bayanuni and team with the youth committee. Alhamdulillah, we ask Allah subhanahu wa ta'ala that the good of these efforts, inshallah, are accepted for you and for your family, inshallah. And we truly appreciate this. I know I gave you very short notice and we're taking you from your family now, but in making your expertise and knowledge available to us, we are truly appreciative, alhamdulillah. I'll turn it back over to Brother Kashif, inshallah, to introduce the next segment.
Jazakallah khair, Imam AbuTaleb, for reminding us of the true life of the Sahaba, and that some of them went through these financial hardships, some of them had great financial knowledge as well, alhamdulillah. So as Imam AbuTaleb mentioned, we are joined today by Brother Ahmed Kubwa, IR Shura member, as well as finance chair, and very instrumental in helping out the youth committee and the whole IR Thrive initiative. IRYouth.org, I believe, is the website for that. Alhamdulillah, they're doing some incredible work, especially the Yasir program. Amongst those hats, Brother Ahmed Kukul also wears the hat of being Edward Jones' financial advisor and is very well versed on the CARES Act. This is the Coronavirus Aid, Relief, and Economic Security Act that was taken from a mere idea into a signed, sealed, and delivered bill in just 2 weeks, a couple weeks ago. So alhamdulillah, he's gone through all 800 pages of this act and put together a beautiful presentation for us to explain to us exactly what the ramifications are, who's eligible for the $1,200 stimulus, and down the road as well, what are the financial implications of this? What are the terms bull and bear market? Are we going into a recession? What are interest rates like? So alhamdulillah, this is going to be an incredible high-level financial presentation by Brother Ahmed Kukwa. In addition to all of that, he is also an incredible baker from what I hear. So Brother Ahmed, would you mind telling me about this baking before we get started? I heard there's some kanafa in the works for me.
Yes, so as you can imagine, wearing so many hats can definitely, you need some time to take your head off. And my way of relieving that stress is baking and being in the kitchen, doing some Middle Eastern bakeries, including knafa, which I really enjoy, which it can be dangerous during those times where we're at home. So maybe consuming more than we should of these great delicacies. But I also enjoy gardening, as I shared with you earlier. So alhamdulillah, it's been a blessing in many ways, getting the opportunity to do things that we enjoy. But also it's been a challenge in many ways as well. Inshallah, we'll talk about many of these things as we move forward.
Inshallah. I'm more than happy to help you with taking a tax on your kanafa, just taking a small portion to make sure you don't eat too much, alhamdulillah. Now I'll pass it over to you, Brother Ahmed, if you would take us away and explain all the intricacies and enlighten us on this as well for the audience. Before Brother Ahmed gets started, we have the live chat on YouTube. Please feel free to use that. I think this presentation of most of our other ones, we'd love to hear your questions. We'll take them on YouTube. We'll take them via Instagram, via Facebook. You can feel free to message us anywhere. And I'll try and get Brother Ahmed to help answer those in this session or a later session, inshallah. Brother Ahmed, take us away, inshallah.
Of course. Thank you. Jazakallah khair, Brother Kashif, for that great introduction. Imam AbuTaleb, Jazakallah khair for the introduction. And as Brother Kashif mentioned, this is one of the issues that we are that came up recently as a result of the situation that's been going with the economy. Last Friday, the CARES Act has been passed, and CARES Act stands for the Coronavirus Aid, Relief, and Economic Security. And before I begin, I'd like to share with you a little bit of my background. As Brother Kashif said, I'm in addition to my roles with the IR as a Shura member and fundraising shares and the vice chair of the youth committee, I also professionally work as a financial advisor with Edward Jones. I've been with Edward Jones for the past 4 years, and with honor serving our Muslim community in the Triangle area. I became a financial advisor because I have a passion for investing in general, but what I really enjoy the most is helping people achieve their financial goals. This is also a big reason why I'm here to talk to you, Brother Kashif, and everyone that's tuning in and listening to us. I'm honored that I'm here and to share some of my experience with everyone. And I will be glad to listen to any questions that you have along the way, which helps me understand what's important to our community, inshallah. So going back to the CARES Act. So as I mentioned, the CARES Act has been passed Friday as a result of what our country has been experiencing in the past couple of weeks. And today there's two parts to our presentation. Part one is to cover what is the CARES Act, including discussing what came into it, what parts of that bill and what are the highlight that might affect us as in the Muslim community and as individuals and small business owners. So we're going to talk about that in part one. And in part two of our presentation, we're going to talk about the outlook and opportunities. So looking forward, looking ahead beyond what the situation that we're in, and we're going to answer some of the most important questions along the way, inshallah. Of course, today we're not going to talk about any religious rulings, any permissibility issues. Imam Muammar on Tuesday in his presentation has covered that part. And if you have any permissibility question or religious ruling, please direct it toward the Imam's office or the Amjad. There's a lot of resources that talks about that as well, inshallah. So let's start with,
inshallah, I'll include a link to that video here about the religious rulings. Sorry to cut you off, Ahmed, but there'll be a link in the bio to this video about religious rulings.
Jazakallah khair, Brother Kashif. So let's start with the CARES Act. What is the CARES Act? As we said, it's a law that was signed by President Trump last Friday. And the main goal of this act is to stabilize the economy. And that can be achieved by giving financial stability and relief for individuals and businesses affected by the COVID-19. The bill is very broad, as Brother Kashif mentioned. It's over 800 pages, and it covers different areas and different industries in too many specific details. And we are still in the work of analyzing all what came in that act. But there are some highlights that I think are important for individuals and families that we're going to go over today. So the biggest highlight in the CARES Act that was passed Friday is the cash payments and unemployment assistance. And in the CARES Act, they announced the 2020 recovery payment. So all U.S. residents will be with adjusted gross income of $750,000 if you're single, filing single, or if you're filing jointly, up to $150,000, you are eligible for $1,200 per adult and $500 per child under the age of 17. So a family of 4 can receive up to $3,900 in payment. Now, there are no minimum income requirements to receive that money. So anyone who's below that threshold will receive that. And then anybody who's making over 150,000 up to 198, there will be a phase out. So they will receive a reduced amount based on $5 for every $100 over the income limit above. And it will be fully phased out if at $198,000 if you're filing jointly, and $99,000 if you're filing single and with no children. Now, the good news is there's no additional action from your end to do that. If you filed taxes in 2018 or 2019, and on your tax forms, you've included your bank account information, the payment will be transferred to your bank account based on your most recent tax returns, whether that's 2018 or 2019. If you have not filed your taxes because you're not required to, or you're not eligible to file for taxes, you can file for your 2019 taxes on the simple form. You can talk to an accountant and include your bank information, and that way you will receive that payment. But if you've already filed your taxes last year or this year and included your bank account information, there's no further action from your end, and the money will be sent to you in the coming weeks, at the latest in the coming month. The second part is the increased unemployment assistance. So normally there is an unemployment assistance that you would usually get if you become unemployed or laid off. They've increased that amount by an additional $600 per week. So if you file for unemployment, in addition to the standard unemployment benefit that you would get an additional $600 for a week. And also they are providing 13 weeks of additional unemployment benefit. So in addition to the standard unemployment benefit that you would receive, there will be an additional 13 weeks that you can get for this year only. Of course, you will have to apply for unemployment, and you have to be eligible for unemployment to get those benefits. The third point is delaying your tax filing requirements. And normally you are required to file your taxes by April 15. In the act that was passed Friday, that has been extended to July 15th. So everything that's related to your tax filing, you can now take more time if you need to file your taxes, including things like if you want to contribute to your IRA. Usually the deadline for IRA contribution for 2019 is April 15 as well. now that has been also extended to July 15th. So you can get more time if you need to file for your taxes. The second important part might affect people who are in retirement or retirees in general, or people saving in their retirement accounts right now. So retirement account changes. So if you have been affected by the COVID-19, being infected or taking care of someone who has been infected, and you need to access your retirement accounts, and you are 59 and a half or younger, usually there is a 10% penalty to access your 401k or IRA accounts. But in this case, if you've been affected or infected by COVID-19 and you need to access your savings, you are eligible to be exempted from the 10% early withdrawal penalty for withdrawals up to $100,000 from your IRA or 401k account. But of course, you have to qualify for it. The good news is that you can take the money out. Of course, that doesn't eliminate the taxation part. So the penalty would be waived, but you will still get taxed on it as an income on the amount that you take. But you are eligible to recontribute that money over the next 3 years if you need to, or if you can, and sort of pay it back into your IRA. Now, another option that's available for you, and not all companies provide that as part of your employer retirement plan or 401k, 403b plan. Some of those plans offer a loan option. Normally, you're allowed to take up to $50,000 in loans out of your 401k, or 50% of the balance, whichever is lower. In 2020, that has been increased up to $100,000 or 50% of the balance of your 401k, whichever is lower. So that's another good news, increasing the limit of how much you can take out in loans out of your 401k account. Also this year, this act has also allowed for a temporary waiver of required minimum distributions, or RMDs, for 2020. So if you are 72 or older and you are required to take your RMD, or if you are 70 half or older and you've already started taking RMDs as of last year and you're taking RMD, or you have an inherited IRA and you're taking RMD out of it, this year you are eligible to not take those RMDs, which is a good thing because it minimizes your taxable income and minimizes the taxes that you will pay by the end of the year. So if you don't use that income and you don't have to take money out of your retirement accounts, that's something that you might want to look into as an option. Of course, we always, when it comes to accessing your retirement accounts or taking loans out of your retirement accounts, it's always a good idea to consider to exhaust all your other options before you tap into your retirement accounts, because there are always tax consequences that come with accessing your 401k or IRA accounts. Even though the penalties are exempted for this year, there are still tax consequences. So make sure that you exhaust all your options as a general guideline before you consider tapping into your IRA or retirement accounts. Now, the next thing on that bill is the enhanced tax benefit for charitable gifts. As of 2018, the new tax law that was passed then, it eliminated any deduction if you're not itemizing your deductions on your taxes. So this year, there's the act allows us to deviate from that rule, and you can deduct up to $300 from your taxes in charitable contributions. So if you give to a charity like the IR or any nonprofit organization that are registered as a non-profit organization, you can deduct those donation $300 even if you don't itemize your deductions. For changes, there's also changes on limits on charitable contributions. As of 2018, the maximum you can deduct on your taxes from charitable donations was 50% of your adjusted gross income. For 2020, this has been suspended. So if you donate more than 50% of your adjusted gross income, you can get the full deduction on your charitable contribution. For corporation, that limit has been increased from 10% to 25%. This allows for more deductions for people who make donations for their local communities and local nonprofit organizations. The next part on the CARES Act is related to your mortgage. If you own your home and you're paying mortgage payments, now the CARES Act allows you to postpone your mortgage payment up to 180 days. And if you need to, you can extend for an additional 180 days. So that's a total of 1 year between the basic plus the extension. And if you need that due to a hardship caused by COVID-19, you can get that exemption and or postpone those mortgage payment. But I always advise, like, when you make that decision, to talk to your financial institution, talk to your financial advisor to make sure that you have the right and appropriate plan when you make those post requests. Also, in terms of foreclosures, the federal government now in the CARES Act prevents people from prevents a financial institution for federally backed mortgages that are owned by Fannie Mae and Freddie Mac to be foreclosed for the next at least 60 days beginning March 18th. So over the next 2 months, financial institutions cannot force foreclosures on people who cannot make their payment, and which gives them enough time to request that postponement of paying the mortgage until they can get back on track and pay off their mortgage payments if they need to. If you are renting your home, the CARES Act allows renters to allows landlord to doesn't allow landlords to charge any doesn't allow landlords to do any evictions for the tenants, or also they cannot charge any fees or penalties for non-payment of rent. You still need to pay your rent, but if as a result of hardship you delay that payment, you can work with your landlord, and your landlord can delay or postpone that payment for you. You still have to pay it, but they cannot force you to leave the property or charge any penalties on that. It's always advisable, of course, to work with your landlord if you're causing hardship and open those lines of communication, because landlords are also might rely on that income. So you want to be thoughtful in that when you consider that as well. The next part is student loans and education. If you have a student loan, now the CARES Act has suspended payments automatically for all federal student loan through September 30th. So for the next 6 months, you don't need to pay your student loans, and there will be no interest accrued or penalties during the period of suspension. This is a good opportunity for you to, if you can, since you don't have to make those payments and the interest on them, to save up the amount that you would have paid in the next 6 months, and after 6 months use it up to pay off the principal. If you're in a situation of a hardship and you cannot make those payments, well, you just receive the relief of suspending all these payments, and you don't have to pay them for the next 6 months with no interest and no penalties. There are additional provisions related to student loans and education that goes in more details to different situations. If, for example, it allows universities to make payments to students who were unable to complete work-study programs. So it allows some types of refunds, some types of treatment. So if you are in one of those situations, you might want to talk to your educational institution and work with them to find a workable solution in light of the new CARES Act. Finally, small business owners. There is a big part that covers the relief programs for the small business owners. mainly under the disaster relief loans and the paycheck protection loans for a business owner. And the main idea here is to make sure that small business owners, they don't go bankrupt. They are able to meet their fixed expenses regardless of their business operation, and they're able to continue to keep their employees and pay them on time, even though that the operation is not working. And if you are a business owner, you can apply through the SBA or your local banker who's a member with the SBA administration. You can ask them and you can apply for these loans. These are low interest loans. And again, the fact that there is interest, there is some guidance by the Imam, which Brother Kashif has shared with us in the chat box below that you can read about it. But these loans are available for small business owners. The good news is that these loans are forgiven if you meet a certain criteria and if you follow the guidance of these loans. So these loans are offered for business loaners. They can take them, pay their employees their paychecks on times, cover their fixed expenses. And if you follow the guidance and the guidelines of those loans, you can apply for forgiveness of these loans. There are also a lot of other provisions that can be very beneficial and relieve some of the cash flow stress on business owner, including, for example, delaying payments for employer payroll tax, the employer retention tax credit for employers subject to full partial suspension. So you can suspend some of the taxes that you pay on a continuous basis to the IRS, modification for rules around net operating losses, modifications for rules around corporate AMT credits, and a temporary increase in the limitation on interest deductions imposed by the Tax Cuts and Jobs Act. Now, there's a lot of details related to your taxes if you're a small business owner, or even if you're an individual or a retiree. My recommendation as a general guideline, always work with your financial advisor or tax professional, consult with your accountant on anything related to taxes and tax consideration, and work with your financial advisor to consider key aspects of the CARE Act as part of your financial strategy. Brother Kashif, this brings me to the end of part 1. And before we move on to part 2, I want to see if anyone has any questions or if they would like us to answer any specific things about the CARE Act.
Jazakallah khair for that wonderful presentation. It was enlightening to see some of the details explained more clearly and succinctly instead of having to read those 800 pages. Jazakallah khair for putting this together. We have one question from Sire Tom on YouTube. He asks, retired personnel who receive a pension from the government, would they still receive the $1,200 per person?
The answer is yes. There's no minimum amount for income. The only exception is that if your pension is over the phase out amount, which is 198, if you're between the 150,000 filing jointly up to the 198, you will receive a discounted amount. If your pension income is below 150,000 on your taxes filing jointly, then you will receive the full amount.
Jazakallah khair, Sire Tom, and Jazakallah khair, Ahmed, for answering that question, alhamdulillah. So I have a couple of questions of my own.
Of course.
As we look into part 2, will there be a recession related to this coronavirus? Or will things kind of dip down now and then pick back up? As our viewers might know, the stock market was trending around 30,000 points about a month and a half ago. February 19th, I think, was the peak. And then today we're around 19,000. So there's been a sincere drop off in the market. Will there be a recession this year, in your opinion, Ahmed?
So that's a very good question, Brother Kashif. And let me start with this. So 2020 started off right where 2018 had left off. It was absolutely a banner year for stocks and the financial market. It was the best performance since 2013, made a lot of people comfortable with how the market performed. But market conditions quickly changed as the coronavirus pandemic spread globally, and efforts to limit the contagion suppressed global demand. On the conservative side, last year bonds also performed very well, posting their best returns in 17 years. However, as the spread of the coronavirus gripped the nation and the world, economic activity paused, stock markets plunged, and the bull market, which is another term for growth in the market, like what we witnessed in the past 10 years, the second longest in US history, ended abruptly. Nobody was really expecting an end to that expansion that we've witnessed over the past 10 years. And if you would have asked me 2 months ago, do you see a recession in the financial markets? I would tell you, based on economic conditions, we don't see it happening in 2020. All economic indicators were showing for another strong year in the economy. But then nobody could have foreseen that coronavirus would cause what it has caused in the economy. But given the uncertainty caused by the global pandemic, you may be wondering how markets will perform in 2020, as you may have asked. In fact, there may be several questions you have about your investment this year, if you are an investor, including whether there will be a recession and what to expect from the US, political elections. One way to think about these investment outlook is like a jigsaw puzzle, just like the puzzle that we're presenting in front of you. There are several pieces that fit together into a cohesive whole. So it's very important to put the backdrop and have a discussion about that so we can draw the pieces together. Putting the pieces together will be a recurring theme in our conversation today in this part 2. And like a jigsaw puzzle, economic conditions, corporate performance, and international backdrop, and your investment decisions basically fit together to form a larger picture. So it can be hard to see that pattern among the various pieces in our outlook, but let's start with the first question that you have asked Brother Kashif. So will there be a recession this year? And that's a very good question. The current economic expansion is the longest in the US history. The economy is central piece in the puzzle because a healthy economy helps support stock returns. Our first key question for the investors is, will we see the recession this year, as you may have asked? And to that, I would say that the US economy has grown a little faster than 2% annually over the past 10 years. That's specifically the GDP growth. That's considered a moderate pace. So it was a slower pace than what we've experienced historically, but it's not as fast as with past expansions. We think that the economy will slow significantly in the first and second quarter of 2020, as we have seen already in the first quarter, which ended March 31st. And as efforts to contain the coronavirus through social distancing and limiting social gatherings disrupt supply and demand channels of economic growth. We also think the economy will likely rebound starting in the second half of the year as the number of new cases eventually recovers and normal economic activity resumes. And if you look at the slide in front of you, we can see that the economy is composed of 4 main major pieces: consumer spending, business investments, which is the second part, government spending, and net exports, right? And these are important 4 pieces for understanding the economy and answering the questions. So consumer spending is the largest component of growth. It's actually 2/3 of our economy. Consumer spending is supposed to be is supported by healthy job markets, low interest rates, and robust household savings rate, which connects directly to the CARES Act and the reason why the CARES Act was passed. Because it's really, when you think about the economy, it's a domino effect. And to avoid what has happened in 2008, the government passed the CARES Act, and they acted relatively fast to before things get out of hand. And the CARES Act will help us, will help the economy do a couple of things. One, make sure that there's enough liquidity. When we say that consumer spending is 2/3 of the economy, it means that when people go out and pay their rent, pay their mortgage, they go out, pay their utilities, and they buy their food and their basic necessities, that consists 2/3 of our economy. And people would stop doing that if there's no liquidity in their hands, if they lose their jobs, if unemployment rates go up. So these can increase the risk of us getting in a recession because consumer spending will go down. Now, what the CARES Act did, which what we talked about, it made sure that it gave cash handouts to people, whether you are working or not, whether you are retired, receiving income or not. You will receive that roughly $1,200 per adult, $500 per child. An average family will receive right below $4,000 in April, which will help them meet those basic necessities regardless of their work situation. It's only based on their income. This is going to help a lot of people to continue to be able to meet their basic necessities and continue to spend, which will support the economy. Now, this is for April. You may ask, okay, what's after April? Well, the government has already started talking about another package in May if the situation extends into May. So we should expect another cash handout exactly the same as the one that we received in April in May. So that's going to help. That's the first part. The second part is small and medium business owners and large corporations. So part of the CARES Act, the government is bailing out large corporations in exchange of not laying off their employees. So the money that those large corporations they will get, if they don't lay off their employees, they will be forgiven on that amount. Likewise, small and medium businesses can apply for the Paycheck Protection loans and the disaster recovery loans, and these loans will be forgiven if the employers don't lay off their employees and continue to pay their employees. This will ensure that more people are still employed and receiving their income regardless of what's happening in the economy, which means 2/3 of our economy would be safe. Now, hypothetically, moving forward, if this situation continues over the next 10 months, which is the estimate of how long will this last, it will help many people continue to spend, and it reduces the likelihood of us getting into a recession. Now, the second part of the answer to that question, are we going to go into a recession, is a healthy job market. And over the last 10 years, we had a very healthy job market. And that's actually the unemployment rate has been near its 50 years low and well below the average of unemployment rates reached in past economic recessions. And this is aligned with a lot of strong financial and economic data that, as I said, 2 months ago, if you were to ask me from a financial perspective, are we expecting a recession in 2020? I would tell you not a chance based on economic factor. So till today, the economy is still strong by many measures. And this has also strengthened the hypothesis that a chances of a recession is going to be, it has been reduced. But even if we go into a recession in the coming months, it will be a quick recession, and we will have a speedy recovery after that, based on what the stimulus package and the government fiscal policy have helped us achieve. Let's move on to next question, Kashif.
Of course. I've received a bunch of other viewer questions, and I appreciate Brother Imran Akhil writing into us, as well as Sister Annie writing into us. We'll get to those questions very shortly. You know, one question we received from Sister Annie, and I think is very relevant, is what is the estimated time to receiving these payments from the government, from the CARES Act? Kind of goes back to part one.
Mm-hmm. So the estimates, it should be rolled out in the next couple of weeks, but definitely the estimate is that by the end of the month, the IRS should be able to roll out those funds. That's the official announcement so far, but we do expect delays. It is a big job that nobody has been expecting. So the IRS is putting all their resources right now toward that and making sure that everybody gets their money as soon as possible. In the meantime, just make sure that you have your updated bank account information to the IRS in your 2018 tax returns if you haven't filed your 2019. And if you did file your 2019, make sure that your bank account information is up to date and correct on those forms as well. And you should receive it as they work toward that and as they get to it.
Jazakallah khair. Now, I think the next question comes from Brother Imran Akhil as well. He asks, what is a good time to invest in the markets? Should we wait for the slump to go down as we're trending on this negative trend today? Stocks like Luckin Coffee out of China went down 80% just today alone. Zoom that we're using right now doesn't seem to be going up at all. Should we invest right now in the stock market, or should we wait a couple of days and see will prices continue to drop? What's the best time to maybe consider investing in the stock markets? How long will this market slump last?
So I'm gonna move forward for that question. So it really connects to this question: how long would the market slump last? And after really a 11-year run in the financial market, the second longest bull market in the U.S. history came to an end, as we've seen in the past couple of weeks. The stock market has fell over 20%. And this is a signal of a bear market. And the reason for the market sell-off was uncertainty, more of a panic than anything else. Panic as a result of the coronavirus and how the pandemic would affect economy and companies. As you may know, always financial markets reflect what might happen in the future. And when there's a lot of uncertainty, people tend to react, what caused the sell-off in the market in the past couple of weeks. The rapidity and the severity of the market sell-off and the wide market swings associated with the pullback reflects the underlying uncertainty about the virus, the extent of its spread, progress to contain it, and its cumulative economic effects in the US and around the world. As unsettling as the market pullback is to investors, there are three key takeaways to provide in perspective. Initial conditions matter. The economy was in good shape at the start of the global health shock that triggered the pullback in stock. We cannot ignore this fact that until 3 weeks ago, the economy was strong. If you look at financial data today, it is still strong in many ways. The Fed and federal government have injected monetary and fiscal stimulus in the economy to support financial markets, businesses, and consumers in response to the turbulence reflected in stock prices. And I believe that this stimulus will help the economy buffer the impact of the virus and set up support system for stocks to climb once the pandemic effects eventually fades away. And then 3, a diversified portfolio generally won't match the market decline, which we've seen. I worked with a lot of investors, and even though the market went down over 35-40% in the last couple of weeks with extreme volatility, the average diversified portfolio went down around 10 to 12%. This is a big testament on what the value of diversification. But it's important to note that diversification does not ensure a profit or protect against losses in declining markets. Now, going to your question, when is the best time to invest? I think this is the number one question that I've been asked over the last 3 weeks. And the second question that I got asked the most is, when is this gonna end? This volatility is gonna end. And the answer to that is, I don't know, and I don't know, to be honest. And nobody knows, because no one can forecast the future and what the future might hold. But what I know for sure is that just like every bear market, just like every downturn that we've witnessed in the past 120 years, most recently 2008 and 2000, we got the same sentiment of, this is it, this time is different. And that's probably the most dangerous sentence that we can use now when we think about economies, that this time is different. The fact is this time isn't different than any other time. The fact is that there will be an end to what we're experiencing now, and we will move away from the current situation that we're in. Now, my the way I approach this in terms of investment, of course, everybody's situation is different. Everybody's it depends on their investment strategy. So, but as a general rule, there's even today there are opportunities in the market that you can capture. There's a lot of high quality companies that are down 30 and 40%. Now, I cannot control what these companies and what the stock market is going to do a week, 2, 3, 10 weeks from now. But what I can control is how I invest my money and capture the opportunities that I have in front of me today. Because the fact is, if you buy today a high quality stock, high quality company, a 30 or 40% discount, 12 months from now, chances are that this company is going to go back to its price point. So regardless what's going to happen in the next, let's say 10 weeks in the worst case estimate of how long this is going to last, you would, and this company goes back to its price point before the drop in the market, that's a 40%, if not more, return. You've doubled your money. So to me, that's a good return, regardless what happens volatility. The common mistake that most people do in times like this is trying to time the market, and that's probably the biggest mistake that someone can make in such times. The best way to approach this is to approach the market based on opportunities that you see today and capture those opportunities as you go. So start cherry picking on those opportunities as you move forward. If you are unsure or don't know how to approach that, I advise you to work with someone who does. Reach out to a financial advisor, somebody who has experience in the financial market and can help you navigate that area to capture those opportunities.
Jazakallah khair for that wonderful answer, alhamdulillah.
Mm-hmm.
You mentioned a diversified portfolio. One of the big things that everyone recommends in a diversified portfolio is to not just diversify locally and having some tech stocks, some real estate stocks, other automotive stocks, but also to diversify globally and include some global stocks on your portfolio. Now, with regards to that, do we think that global markets will continue underperforming at the rate they have, or will they start to rebound as well?
Well, again, nobody can forecast the future, and when I'm always asked a question about the future, my answer is I don't know, but I always like to look at the facts. Historically, over the last 10 years, even though that the US economy has been on one market cycle and increasing over the last 10 years, global markets have been through multiple market cycles, ups and downs. And one of the and before getting into the current market cycle, the global markets has been actually has just started recovery from the last market cycle that they've been going through. I'm talking about markets in emerging markets, Euro-Pacific markets in general. They were in their way to recovery, but then the pandemic, the coronavirus came in, and it stopped most of the growth that the markets has been experienced. Now, the good news is that there are a lot of opportunities in global market, in large corporations, international, in the Euro-Pacific area and emerging markets that are undervalued, and they are positioned very well to take advantage of those opportunities, which it's a great entry point for them. So to put the backdrop of diversification, it's always important to look at those opportunities where you can capitalize on those investments in global markets that are undervalued, that are of high quality, and diversifying your portfolio between US stocks and international stocks to build the allocation or the diversified portfolio that you're comfortable with, that would take you to reach your goals that you want to reach.
Jazakallah khair. It's definitely having a diversified portfolio and working with someone that can help you put the pieces together is a critical element of this. Now I'm seeing two questions, one from Sister Maria Sheikh. Alhamdulillah, Jazakallah for all your work with IAR, Sister Maria. Can the government be expected to recover the cost of the stimulus package by hiking taxes in the future? And I'm actually going to roll this in with a follow-up question, is what will the effect of politics have on the markets, and what will the effect of the markets and the markets themselves, not coronavirus, have on politics? Let's maybe discuss that for a couple of minutes. Ahmed, what do you think will be, let's first actually take Sister Maria's question. Do we think that the government will recover the cost of the stimulus package by hiking taxes?
Well, it's very important to understand how the stimulus package and the fiscal policy work. And even though that there is a cost associated with the fiscal policy and the package that they issued, there hasn't been talks at that level or anything that I'm aware of how are they gonna cover those costs. But one thing for sure is that most of that of the stimulus package, the government has issued a lot of treasury bonds that has been sold to a lot of international governments around the world who has a huge appetite for U.S. treasuries because they pay that high interest. So a lot of it will be financed by the sale of these bonds of the U.S. treasuries around the world. There is a high cost associated to the interest that will be accrued basically on that, and there is a concern in that area. But if you put it in the perspective of the strength of the US economy being the largest economy around the world, I'm confident that they will find a way to recover that and pay off that, especially that they are till today there's nobody competing in the types of asset classes that they're providing to the world based on the rate of return. So as long as there is demand from the global population, from global countries to the US treasuries for the US financial instruments, we believe that I think we are still positioned to take advantage of that as a country and to be able to meet the cost of the stimulus package and the fiscal policy.
Jazakallah khair. To unpack, we'll move to the second question in a second. What impact will politics have on the markets? I'll address from a political science perspective of how the impact of the markets on politics and this whole coronavirus. We're seeing in a lot of states right now that they're either considering postponing their primary elections till later in the season, or considering a different alternative outlook, or considering that everyone without it can receive a waiver to have their absentee ballot counted. So you could sit at home in certain other states and vote in the primaries. In fact, today, North Carolina just made a new law and they allowed everyone to register to vote from home. So you can register online to vote in North Carolina for the first time. And I highly encourage everyone watching to check their voter registration. And if you're not registered, go ahead, go out and vote. And while I'm on that note, today's Census Day. So I highly recommend everyone to fill out their census. Now I'm going to turn it back to Brother Ahmed, inshallah. What impact will politics have on the markets? So the other perspective of what I just talked about.
So, and that's a very important question, Sister Maria. Jazakallah khair for this question. And as you can see in this chart, it's really interesting when we look back in history and match financial data with political data. And as you can see in this chart, consumers tend to have more confidence about the economy when their preferred party is in the office. So between 2008 and 2016, Democrats expressed higher level of confidence when President Obama was in the White House. Since 2016, Republicans have reported higher levels of confidence under President Trump administration. Independents tend to exhibit confidence at levels between the two political parties. The lesson here is that playing politics with your investments, with the financial markets, could have caused you to have missed pieces of the puzzle and miss a strong financial market performance under both administration. Um, and to that point, the fact is, if you go back historically, looking at the long term, back since the 1900s till today, and draw a line, the correlation between who's in the White House versus how did the market perform. And the answer to that is that there's no correlation between the two whatsoever. On the short term, on the other hand, there has always been volatility associated with things like election years, for example, and through political cycles. For example, the first year after the president wins, usually the average rate of return of that year in financial market has been 8.6%. The second year of the presidential cycle, it has been 10.5%. Year 3, that was 2019, it has been 19.1 for us in this political cycle. The fourth year, which is an election year usually, this year, 2020, the average return has been 9.5% in the financial market. This has been regardless of who's in the White House, whether it's Republicans or Democrats. But volatility is the tagline in election years. So every 2 years, we have an election year, which is for the Senate and the representatives. And then every 4 years, we have the presidential. When you look at it from the perspective, the big question now, what would happen if Trump wins the election versus what would happen if Trump loses the election? Well, historically, when the president who's in the office gets a second term, usually the 12 months following to that has been performed better than the alternative. And that's just the historical average, because big part of it is because the president who's in the office has more control and if we want to use the term power to change things and do things in the economy to strengthen the following 4 years to make him look good. While if that president loses, that tends to slow the economy. That's why you see a lot of economic institutions at this point are more inclined to support the current president versus a new incoming one, because they don't know what to expect. And that goes all to the psychological aspect of the voters. They don't want to go with something that they don't know what to expect. They want to go with someone that they know what to expect. We've known the current president for the past 4 years, so we know what to expect from him in the next 4 years. And people they don't like change as a general rule. Hope that answers the question, Brother Kashif.
Exactly, that's a wonderful answer. So we're about 7 minutes over our usual ending time of 9 o'clock. Brother Ahmed, would you be up for going another, say, 13 to 20 minutes?
I'm okay. I'm fine with that if you're okay.
Okay. How does the YouTube chat feel about that? Could you guys just give me a thumbs up, thumbs down on the YouTube chat if you want us to go for another 10 more minutes? And while we get the YouTube chat to give us some answers, we have a question for you personally, Ahmed. Sister Shaida wants to know which cheese you use for your kanafa.
So original Nabulsi cheese is the one to go with.
Alhamdulillah. Our next question is, Nabulsi kanafa, it hits different. Do you use is it the fine one that you make, or do you make the more softer type? So the one with the fine strands that's harder, or the softer kind?
So I do both, but my personal preference is the one with the strands.
Okay, perfect.
Yeah.
We have a thumbs up from Brother Amir. Brother Amir, Jazakallah khair for all your work at IAR. Brother Amir actually just rebuilt some of the benches at IAR, and he's been instrumental in making sure IAR is kept up with new code and reinstalled some new speaker systems. So Jazakallah khair to all the maintenance work you've done for the masjid. Our next question, let's see what we're gonna do.
Before the next question, Brother Kat, let me share with you something about volatility, because I think that's a question that on most people's mind.
Okay.
And when it comes to volatility in the market and what we should expect from it, we did a study that goes over the market volatility over the last 120 years, since 1900 till today. And over the last 120 years, what we've seen is that the market dips in value 5% or more about 3 times every year in the last 120 years. So the average is 3 times every year we get a dip in value of 5% or more. We've seen that the market goes into a correction area, which is a drop in the value of the market of 10% or more once every year. And that has been the average for the past 120 years. And we've seen that the market goes into a bear market once every 3 years. And a bear market is defined when the market goes down 20% or more in value. So when you look at these numbers and apply it to what we're witnessing today, so 2019, it was a unique year. And big part of why a lot of people are uncomfortable with what's happening today is that they got used to the market being so quiet and achieving very good returns in 2019. In 2019, we haven't witnessed any dips or any correction, not to mention any bear markets. For the past 10 years, since 2008, a little bit over than 10 years, we haven't had any bear market, even though historically the average has been once every 3.5 years. And we definitely didn't have any dips back in 2019. So moving on to 2020, we were expecting some sort of volatility like we've seen. We weren't expecting a bear market, but we were expecting at least one correction and at least 3 dips in 2020. But because of, unfortunately, the virus situation, and a lot of uncertainty, that have moved us to the bear territory. But if you put in things in perspective and long-term effect, what we're witnessing today in terms of a bear market, this is our first bear market in over 12 years since 2008, which is definitely in line with historical data, which supports that this shall pass. And this is actually, yes, we are down, and it's unfortunately that we're down over 30% as a whole in the market when you look at the Dow or the S&P or the NASDAQ. But this is also an opportunity for people who are interested in investing, and it's a great entry point that might not come again for a very long time. Last time it happens was 10 years ago. And personally, I was waiting for another opportunity to invest at that low entry point because when you buy things, high valued assets at 30 or 40% discount, that's an excellent entry point for many years to come.
Alhamdulillah. That's definitely a great point, that we have these cycles of bear markets and bull markets, and it kind of was the time for that correction to occur right now. The market was a bit overvalued, and this is the normal trend of things. So I have 2 final questions to wrap up.
Yep.
One comes from Brother Imran Akhil. He says, what is a healthy amount of cash to keep on hand, liquid cash, not invested in the market, to get us through this crisis?
Okay, this is a very good question, Brother Imran. And there, as a rule of thumb, before you consider investing, if you have cash on the sidelines, you want to always make sure that you have enough cash over the next to sustain you and your family to meet your basic necessities for at least the next 6 months, especially in environments of uncertainty like this. So you have an emergency cash bucket that would cover your financial needs over the next 6 months. And as a rule of thumb, to make that quick calculation, let's say that you have an annual income of 100,000, right? Over the next 6 months, your income would be 50,000. Deduct taxes out of that based on your tax bracket, and that is the number that you need to keep in your emergency cash account. And of course, you adjust your income. You adjust the value of that account based on the level of your income and how much you're spending every month. But as a rule of thumb, 6 months. If you are in a high-risk industry, I would recommend to go up to 9 months, like in IT and technology, where in times like this, there's a high chance of layoff. You want to make sure that you at least can sustain yourself for 9 months. If you are in a low-risk industry, like healthcare or education, these are all low-risk industries, 3 months of emergency cash is appropriate and should be sufficient.
Jazakallah khair. That's a great financial tip, actually. And for those that are curious, we're going to be doing a series on the IAR Instagram account, as well as my personal Instagram account, on personal finance tips, both for coronavirus and in general. And inshallah, Brother Ahmed will be joining us to share some suggestions such as that of how much money to keep in cash and how much savings you should put aside. A rainy day fund should an event like this happen in the future, inshallah. So check out Raleigh Masjid on Instagram for more information about that, inshallah. My final question is, and we've mentioned a lot today. We've mentioned bull markets, bear markets, interest rates, recessions, global markets. It's quite a lot for me to handle. What is the best way to put all these pieces together so that I can avoid some common mistakes?
All right. So that's a very good question. And let me just put it together and summarize what we've talked about and put all the pieces together. So definitely the risk of recession is on the rise in 2020. There's a lot of uncertainty, and in light of the global viral pandemic. And there are a lot of short-term headwinds associated with the virus. But we think investing in the US market continued to be attractive for the following reasons. Positive economic conditions before the pandemic starts. And if you look at financial data today, and some of the largest companies in the US, and the economy in general, we are still in solid footing. There are still solid consumer spending and healthy labor market. And we expect that to continue as a result of the fiscal policy of the government and the stimulus package and the CARES Act that they announced last week. That's going to only strengthen the footings of the economy. Low interest rates, that's very important to pump liquidity into the economy, which is going to help companies and corporations, small and medium businesses, access to cheap financial resources to be able to navigate through these uncertain times and maintain and continue to run their business and at least maintain their employees. Modest inflation. Unlike historical market downturns, inflation is still at all times low. And this, if anything, it only supports the economy, fueled by cheaper oil prices today. If anything, things are getting cheaper in general, unlike other economic downturns in the past where the economy wasn't as strong as it is right now, which caused inflation to hike and things were getting expensive to add basically fuel to the fire in those situations. This is not the case today. Right now, we have low inflation, prices are still low, interest rates are low, the economy is still strong. And the highly accommodative monetary policy by the government, by the financial institutions to support the economy and support small, medium businesses and individuals. So for all these reasons, we expect that the future is bright. We can see that light at the end of the tunnel. We also realize that there's always opportunity. Now, having said that, there will be volatility. It's not going to be a smooth ride. It will be a bumpy ride. And remember that these pullbacks that we're experiencing right now, they are creating these opportunities, and these are opportunities to add not any type of investments, but quality investments at lower prices. So in a way, now is the time to take advantage of those opportunities, because with minimal risk, you can achieve higher returns. And as you know, volatile times come and go, and focus on the bigger picture on long-term goals. So it's always good to have the expectation that everything that you do today, and you can make the decisions on how to invest your money, that you are investing for the long term, a year, 2, 3 years down the road. So don't get discouraged if you capitalize on an investment today and it goes down in value in a week or two, because you need to have that long-term perspective in things. And everything that you're doing now over the next, let's say 10 weeks, 12 weeks, until the situation that we're in ends, hopefully, you are investing for the long run, for long-term goals. You're not investing for tomorrow. So have realistic expectations on your investments. And finally, seek for opportunities to complete your investment mosaic this year and through your investment horizon. It's important to have that strategy that you need to develop. You don't want to be, you always need to build the plan before you may take an action. So I always encourage you to partner with your financial advisor and your tax professionals. They can help you navigate and take advantage of all the opportunities that are out there, whether they are as part of your currently the tax season and when you file your taxes. So take advantage of all the credits and the benefits and the deductions that's out there for you. And also work with your financial advisor to make sure you build a strong financial strategy that can help you navigate and choose the right investments that works for you and your family. And with that, Jazakallah khair, Brother Kashif, for hosting and for inviting me to have this session. And of course, I'll be here if anybody else has any questions.
Jazakallah khair, Brother Ahmed Kukwa. That was a wonderful presentation. Where can people reach you if they have any future questions, inshallah?
Well, if anyone would like to be in touch with me, you can reach me at my email. That's ahmed.quqa@edwardjones.com. You can see that, you can see my name. Let me.
Sure, I'll go ahead and make this a little easier.
Yeah, if you can help me with that part, Brother Kashif. Or you can reach me at my office number, 919-387-1127, and I'll be glad to be at service.
So once again, what was that information people to reach you at?
It's Ahmed, AHMAD, dot QUQA at edwardjones.com. Or
And
you
your
can
phone number is?
919-387-1127. And that's my office number. You're welcome to give us a call, schedule some time for us to talk.
Of course. So that information is on the screen now for everyone to see. Jazakallah khair, Brother Ahmed Kukwa, for joining us today. This has been a hugely informative presentation. Inshallah, we'll have you back down the road to discuss more personal finance issues that are not connected to this coronavirus pandemic. I'd like to make a request. Would you mind closing us out with Surah Al-Asr, inshallah?
Yes. Bismillah ar-Rahman ar-Rahim. والعصر إن الإنسان لفي خسر إلا الذين آمنوا وعملوا الصالحات وتواصوا بالحق وتواصوا بالصبر. Thank you all,
Brother Ahmed,
for joining us tonight, and stay safe and take care of yourself.
Ameen.
Ameen. Assalamu alaikum.